All right, so today we're looking at something a little different.
Okay.
A bit of an odd pairing, you might say.
Yeah.
We're going to dive into AU Small Finance Bank.
Okay.
They're a big player in India's financial world,
Right.
but we're also going to tie that into the world of value investing,
Interesting.
and specifically through the lens of Benjamin Graham's book,
Mm-hmm.
The Intelligent Investor.
Okay. Yeah.
Now, you might be thinking,
Yeah.
what does a pretty modern bank have to do with a book that was written way back in 1949?
Right. Yeah. Seems like a bit of a stretch.
But stick with us.
Okay.
Because I think we're going to uncover some really interesting connections here
Yeah. Right.
about how some pretty old school investment wisdom can still be
Yeah.
super relevant today.
Well, it's fascinating to me how these two worlds that seem so separate
Yeah.
actually do share some pretty fundamental principles.
Yeah.
I mean, whether you're picking a savings account or trying to decide where to invest, your hard-earned money, it really all comes down to making smart, informed choices.
Absolutely. So let's start with AU Small Finance Bank.
Okay.
Just from the materials you've shared with me,
Yeah.
it's clear that they're not just your typical, basic bank, right?
Right.
They offer everything from like checking and savings accounts
Yeah.
to loans for vehicles,
Mm-hmm.
even gold.
Wow.
They're even into insurance and mutual funds.
It's incredible.
It's almost like a financial supermarket, right?
It's like a one-stop shop for all your financial needs.
Yeah.
And what really stands out to me is their focus on digital banking.
Oh, yeah.
They've got net banking, WhatsApp banking, even a chat bot named
Wow.
AURO.
Really? A chatbot?
Yeah.
Wow.
It's like they're really catering to a customer who's comfortable, living in the digital world.
Yeah, that digital focus definitely caught my eye, too.
Yeah.
And it makes you wonder, like, does that change how we evaluate a bank?
That's a good question.
Like AU Small Finance Bank.
Yeah.
I mean, are traditional financial metrics enough anymore?
Right.
Or do we have to start factoring in, their tech game as well?
I think that's a great question, and it really gets to the heart of how we value businesses in today's world. Things are changing so fast.
Mm-hmm.
And that's where looking back at something like The Intelligent Investor
Yeah.
can be surprisingly insightful.
Yeah.
Even though Graham was writing decades before the internet,
Right.
His core ideas about how to evaluate a business are still incredibly relevant.
Okay, so let's time travel back to 1949 for a minute.
All right.
What exactly is The Intelligent Investor about?
Okay.
And why is it considered, such a big deal in the investing world?
Well, this book is basically considered the Bible of value investing.
Okay.
And it's all about cutting through the hype and really looking at the underlying worth of a company. Graham's not interested in get-rich-quick schemes, or following the latest market fads.
Right.
He's all about finding those hidden gems. The companies that are trading for less than their intrinsic value.
Okay, so like what they're actually worth.
Exactly.
So it's kind of like finding like a designer dress at a thrift store.
Yeah.
It might be hidden amongst a bunch of, other stuff,
Right.
but that its real value is way higher.
That's a perfect analogy.
Okay.
And Graham has this really brilliant way of explaining, this whole idea of intrinsic value versus market price.
Okay.
He asks you to imagine the stock market as this guy named Mr. Market.
Oopster market.
And Mr. Market is kind of an emotional character,
Okay.
prone to these wild mood swings.
Right.
Some days he's super optimistic, offering you these ridiculously high prices for your stocks. Other days he's a total downer, practically begging you to sell at a loss.
Oh, man. Okay, I'm starting to see where this is going.
Yeah.
So the key is to not get swept up in Mr. Market's drama.
Exactly.
Right.
The intelligent investor doesn't let Mr. Market dictate their decisions.
Okay.
They know that Mr. Market's just reflecting, the whims of the crowd, the short-term noise. Instead, they focus on their own research, their own assessment of a company's true worth.
Right.
They buy when Mr. Market is being irrationally pessimistic.
Yeah.
And they might even sell when he's being overly optimistic.
That's starting to make a lot of sense.
Good.
So how do we actually figure out this intrinsic value thing?
Right.
It sounds like it's more than just looking at the, current stock price.
It absolutely is.
Right.
Graham, he provides some formulas to help estimate intrinsic value based on things like a company's earnings and assets.
Okay.
But he also emphasizes that it's not just about plugging numbers into a formula.
Right.
You really need to understand the business,
Yeah.
its industry, its management team.
Yeah.
It's a holistic assessment.
So it sounds like detective work almost.
It is.
You're piecing together clues from their financial statements, the company's operations,
Yeah.
even its leadership.
Yeah.
So even though Graham's formulas,
Yeah.
might need a little updating
Right.
for the digital age,
Yeah.
that fundamental approach to research is probably more relevant than ever, right?
Absolutely.
Would you say?
I would.
That-
And there's another key concept from the intelligent investor
Okay.
that's especially crucial in today's, kind of volatile market.
Yeah.
It's this idea of a margin of safety.
Okay. Let's unpack that. What does that mean in practice?
Okay, so think of it like buying a used car.
Okay.
You wouldn't just pay the seller's asking price
Right.
without factoring in, potential repairs.
Right.
Right. That buffer you build in is your margin of safety.
Oh, yeah.
It's protecting you from unforeseen expenses.
Mm-hmm.
And investing, it's the same concept.
Yeah.
You want to buy a stock
Yeah.
at a price significantly lower than its intrinsic value.
So it's like a built-in discount.
Exact.
To protect you from, the inevitable market ups and downs.
Yeah.
Kind of like having an emergency fund for your investments.
I love that.
Yeah.
That's a great way to put it.
Okay.
It's about being prudent,
Okay.
recognizing that you can't predict the future with 100% certainty.
Right.
Yeah. Things happen.
Exactly. This is making me think about how we approach, just like basic things like savings accounts or loans.
Right.
It's so easy to get caught up in like the marketing hype.
Oh, yeah.
But maybe we should be thinking more like value investors.
Absolutely. I think these principles apply even when you're not picking stocks.
Okay.
Like, imagine you're comparing savings accounts at
Yeah.
AU Small Finance Bank.
Mm-hmm.
You might be tempted by the one with the highest interest rate.
Right. Just go for the biggest number.
Right, exactly. But a savvy value investor would dig a little deeper.
Okay.
They'd be looking at the fees,
Mm-hmm.
the minimum balance requirements.
Right. All the fine print.
All that stuff, exactly.
Yeah. Not just chasing the flashy number.
Yeah. It's like those buy one, get one free deals,
Right.
Sometimes the price of that first item is inflated to cover the cost of the free one.
Oh, yeah, that's true.
Yeah.
So it's about being a smart consumer.
Yeah.
Even when it comes to something as basic as a savings account.
Precisely. And let's say you're considering a loan
Okay.
from AU Small Finance Bank.
Mm-hmm.
A value investor wouldn't just jump at the offer with the lowest monthly payment.
Right.
They would look at the total cost of that loan
Yeah, over the life of the loan.
over its lifetime,
Yeah.
factoring in the interest rates, the fees, all of that.
Right. So making informed decisions, not just impulsive ones.
Exactly.
And that brings us back to, that emotional discipline piece,
It does.
doesn't it?
Yeah.
It's so easy to get caught up in the excitement of, a new car or a dream vacation.
Yeah.
But we need to be thinking long term.
Right. And that's where Graham's wisdom, I think, really shines.
Yeah.
He understood that human beings are not always rational,
Especially when it comes to money.
especially when it comes to money.
Right.
We're influenced by fear, greed, all sorts of cognitive biases.
Yeah, we let our emotions get the best of us.
We do.
Okay, so how do we actually apply this to AU Small Finance Bank?
Okay.
Let's say we're looking at them as a potential investment now,
Right.
not just a place to get a loan or a savings account.
Yeah.
How would we put on our, intelligent investor hats?
Okay. Well, just like with any company, we'd start by digging into their financials.
Okay.
We look at their earnings growth, their return on equity, their debt levels, all those key metrics that tell us about their financial health,
Right.
but we wouldn't stop there.
Okay. So we'd want to understand their competitive landscape.
Exactly. How are they positioned
Yeah.
in the Indian banking market?
Mm.
Who are their main rivals?
Yeah. What are their strengths and weaknesses?
Precisely. We'd also want to look at their management team.
Okay.
Are they competent?
Mm. Are they ethical?
Are they ethical? Do they have a clear vision for the future?
So it's like we're building a puzzle,
Yeah.
piecing together information from all these different sources to try to get a complete picture.
That's a great analogy. And remember, we're not just looking for positive information.
Right.
We also want to identify potential red flags.
Okay.
Anything that might, make us question the bank's long-term prospects.
So we're looking for that margin of safety,
Yeah.
that buffer
That buffer.
that protects us from the unforeseen risks.
Exactly. It's about being cautious,
Yeah.
not just optimistic.
Right. Okay.
And here's where AU Small Finance Bank's digital focus, I think, becomes really interesting.
Okay.
On the one hand,
Yeah.
it's clearly a strength.
Right.
They're attracting tech-savvy customers.
Mm-hmm.
They're reducing their overhead costs.
Yeah.
They're positioning themselves for growth in this rapidly digitalizing world.
Right. But on the other hand, there are risks.
There are.
Associated with, any new technology.
Of course.
Cybersecurity threats, platform glitches,
Mm-hmm.
even just, the possibility that their tech becomes outdated.
All valid concerns.
Yeah.
And a value investor would want to understand how AU Small Finance Bank is mitigating those risks.
Okay.
Are they investing in robust security measures?
Mm-hmm.
Are they agile enough to adapt to new developments?
So having that intelligent investor mindset is so valuable.
It is.
It's not about avoiding risk altogether.
Ugh.
It's about understanding it and managing it.
Managing it.
Weighing the potential rewards
Yeah.
against the potential downsides.
Exactly. And it's important to remember that even if AU Small Finance Bank checks all the boxes,
right,
from a value investing perspective,
yeah,
it doesn't guarantee that there'll be a successful investment.
Right.
The market can be unpredictable. There are always factors outside our control.
No crystal ball.
No crystal ball.
Even for the most intelligent investor.
Right.
So where does that leave us? We've looked at AU Small Finance Bank through this lens of value investing. We've dug into their financials, their strategy, their competitive landscape.
Yeah.
What's the big takeaway? What should our listener be thinking about right now?
Well, I think the biggest takeaway for me is that whether you're looking at AU Small Finance Bank as a potential investment or just, considering them for your basic banking needs,
right,
this value investing mindset can really help you make smarter decisions.
I couldn't agree more. It's about doing your research thinking long term.
Yeah.
Not letting your emotions cloud your judgment.
Right.
And understanding that a good investment isn't just about high returns. It's about balancing risk and reward.
And that's where things get really interesting to me.
Yeah.
Because we take this thought experiment even further.
Okay.
And imagine like Benjamin Graham himself.
Yeah.
Looking at AU Small Finance Bank today.
Yeah.
What do you think his reaction would be?
Oh, that's a great question.
Would he be impressed by their digital innovations?
Or would he be, skeptical of their rapid growth?
That's a question that could spark a whole other deep dive.
Right.
I think he'd be fascinated by how technology has transformed the financial landscape.
Okay.
Remember, he was writing in a time when getting stock quotes involved literal ticker tape.
I know, it's crazy.
So this world of instant transactions and mobile banking would probably blow his mind.
Right. But would he be a fan? I mean, value investing is all about finding those undervalued, often overlooked companies. Would he see a fast-growing, tech-focused bank, like AU Small Finance Bank, as fitting that mold?
Well, I think he would approach it with that same methodical, research-driven mindset that he applied to everything. Right. He'd want to understand their technology, their competitive advantages, the sustainability of their growth. Yeah. He wouldn't just assume that because they're digital, they're automatically a good investment.
He'd be looking for the substance behind the flash.
Exactly. Not just chasing the hype. And I think he'd be particularly interested in their risk management practices.
Okay.
Remember, he was all about that margin of safety, that buffer against the unexpected.
Right.
So he'd want to know how they're protecting themselves from cybersecurity threats, data breaches.
Yeah, all those new risks that come with the digital world.
Exactly.
It makes you realize that even though The Intelligent Investor was written decades ago.
Right.
It's almost prophetic in a way.
It is.
Graham was warning about the dangers of speculation, of emotional decision-making, of blindly following the crowd. And those are all things that are just amplified.
They are.
In today's, hyper-connected, fast-paced world.
Absolutely. And that's why his work remains so relevant.
Yeah.
It's not just a set of rules for picking stocks.
Right.
It's a framework for thinking about risk-reward.
Yeah.
The long game, it's about developing a mindset that can help you navigate, the complexities of the financial world.
Right.
No matter what new technologies or trends emerge.
So whether you're considering opening a savings account with AU Small Finance Bank, exploring them as a potential investment,
Right.
or just trying to make sense of this ever-changing world of finance.
Yeah.
Remember that you have the power to become an intelligent investor.
Yes, you do.
An intelligent consumer.
That's right.
Or intelligent steward of your own financial well-being.
Absolutely.
And who knows?
Yeah.
Maybe one day you'll find yourself digging through a company's financials, feeling a little bit like Benjamin Graham yourself.
I hope so.
Well, on that note, we'll leave you to ponder those possibilities.
All right, sounds good.
Thanks for joining us on this deep dive into the fascinating intersection of value investing and the future of finance. Welcome to the deep dive. Today we're going to be looking at value investing and also the services offered by AU Small Finance Bank.
Okay.
You've given us a really interesting mix of sources for this deep dive. A detailed overview of AU Small Finance Bank's products and services, and also some excerpts and discussions around The Intelligent Investor by Benjamin Graham, which is kind of the Bible of value investing.
Right.
So we're going to try to extract the key insights from each and help you to understand not only what these topics are about, but why they matter to you.
Sounds good.
All right, so let's start with AU Small Finance Bank.
Okay.
One of the things that jumped out at me right away from the material is that they offer banking services through WhatsApp.
Oh, wow.
WhatsApp banking.
Interesting.
So that seems very relevant to
yeah, definitely.
our busy lives these days.
Yeah, that's a really interesting way to bridge the gap between traditional banking and the digital age. And I think this focus on accessibility and convenience is going to really appeal to a broad customer base, especially those who are, tech savvy.
For sure. And it goes beyond WhatsApp, too.
Okay.
They've got missed call banking. They've got chatbot assistance through something called AURO.
Right.
And they have a dedicated mobile banking app.
Yeah, you can really see their commitment to digital transformation there. And that's something that we're seeing a lot across financial institutions these days, right?
Yeah.
They're really leveraging technology to streamline services and just make the whole experience better for the customer.
Yeah, makes a lot of sense. So going beyond just the technology aspect,
sure.
AU Small Finance Bank has this really wide range of products and services.
Yeah.
I mean, they have the standard stuff that you would expect, your savings accounts, your current accounts, your fixed deposits.
Right.
But their specialized offerings are kind of where things get interesting.
Yeah, I noticed that they have a really tailored approach to different segments of their customer base.
Yeah.
So, like they have these AU Royale accounts with premium benefits, and accounts designed for women and senior citizens.
Right.
And even a Keyzon savings account specifically for farmers.
Yeah.
It seems like they're really trying to understand and meet the unique needs of their diverse customer base.
Yeah, for sure. And even their loan portfolio goes beyond just, your typical home loans and car loans. They're offering loans for commercial vehicles, tractors, even construction equipment. So it sounds like they're targeting a broader market than your average bank.
Yeah, it seems like a potential growth strategy to me, By offering these financial solutions for industries like agriculture and construction, they're tapping into some sectors that are really vital for economic development.
For sure. And then they also have this 0 to 1 program, which is targeted at startups.
Yeah.
And they have specific programs for doctors, agribusinesses, pharma companies.
So they're really committed to supporting entrepreneurs and these specialized businesses.
Yeah, it seems like it.
That's really smart, especially in such a rapidly evolving economy. Empowering these segments allows them to contribute to innovation, and it could potentially generate a really loyal customer base.
Right. And, they don't stop there. They also provide insurance investment opportunities, including ESG mutual funds.
Oh, wow.
And even resources like financial calculators and blog articles covering topics like taxation and remittance.
Yeah, so they're really going beyond just basic banking needs there.
Yeah.
It seems like they're committed to becoming a comprehensive financial partner for their customers.
Absolutely. So I guess before we move on to the Intelligent Investor, I just wanted to ask you what aspects of AU Small Finance Bank kind of stood out to you the most?
Okay.
And do any of their offerings resonate with your current financial needs or spark an interest that you'd like to maybe explore further?
Well, I think,
take a moment to consider how their services might align with your own financial goals.
Yeah, I think what really stood out to me is how they're catering to these niche markets, and then also their commitment to digital solutions.
Yeah.
I'm always on the go, so having access to banking through my phone is a huge plus. And then the fact that they're supporting specific groups like farmers and women entrepreneurs.
Yeah.
It just shows that they're not just focused on profits, but also on making a positive impact.
Right.
So that definitely resonates with my values.
Awesome.
Yeah.
All right. So now let's shift gears a little bit and dive into the world of value investing through the lens of Benjamin Graham's The Intelligent Investor.
All right. Let's do it.
This book is considered like the cornerstone of value investing, and even Warren Buffett credits it with shaping his investment philosophy.
Yeah. It's a classic for a reason.
Mm-hmm. So The Intelligent Investor, it's considered this, classic book. But can you give us a quick breakdown of just like the core principles of value investing?
Yeah, absolutely. So at its heart, value investing is really about identifying stocks that are currently undervalued by the market.
Mm.
So that means a company's intrinsic value, like its true worth based on its fundamentals, is higher than its current trading price.
So it's like discovering hidden gems in the stock market.
Exactly.
Oh.
Stocks with the potential to be worth more than what they're currently priced at.
Okay.
And it's important to remember that, this is a long-term strategy.
Mm-hmm.
This isn't about, chasing quick profits or timing the market.
Right.
Value investors, they seek out businesses with solid fundamentals, and they believe that they will grow in value over time.
Mm-hmm.
They're patient, and they're willing to hold those investments even if the market doesn't immediately recognize their worth.
Got it. Patience is key.
Absolutely.
All right. So The Intelligent Investor, it's full of wisdom, but let's try to highlight some key takeaways that might resonate with our listeners today.
Okay, sure.
I think a great place to start is with Graham's, Mr. Market analogy.
Right.
He personifies the market as this kind of emotional being.
Yeah.
That's prone to, swings and mood changes. And
he's a fickle character.
Yeah.
Yeah.
So it's like, that unpredictable friend who's either like overly excited or like super pessimistic.
Exactly.
Okay.
And Graham's point is that intelligent investors shouldn't be swayed by these, short-term fluctuations.
Right.
Instead, they should focus on the businesses that they own and their underlying value, not the daily market noise.
So that's where the concept of margin of safety comes in, right?
Exactly.
I feel like I hear that term a lot in investing.
Yeah, margin of safety is central to Graham's approach.
Mm-hmm.
And it basically means buying stocks at a significant discount to their intrinsic value.
So it's like finding a really good deal on something that, is valuable.
That's a perfect analogy.
Yeah.
It's like, finding a high quality item for a steal, you're paying less than it's actually worth.
Right.
And that gives you this cushion if your assessment of the value was, a little bit off.
Mm.
This margin of safety, it protects investors from potential losses, especially during, periods of market volatility.
Okay, so it's about finding those companies that are potentially undervalued and then buying them at the right price to kind of minimize the risk.
Exactly. And another key takeaway from The Intelligent Investor is the importance of focusing on the business itself, not just the stock price.
Mm-hmm.
Graham emphasizes that stocks represent ownership in a company.
Mm-hmm.
And so intelligent investors should understand the business, its fundamentals, its long-term potential, not just fixate on, those daily price movements.
It's about being a business owner, not just like a stock trader.
Exactly.
Yeah.
Looking for a company you believe in and are willing to hold for the long term.
Got it. So we've got Mr. Market, we've got margin safety, and then really understanding the business that you're investing in.
Right.
What else should we highlight from Graham's wisdom?
Well, one more crucial takeaway is his emphasis on patience. Value investing is a long game.
Oh.
It demands a long-term perspective and the ability to withstand those market ups and downs without making, rash decisions.
So you're sticking to your strategy even when the market is like super volatile.
Exactly.
And not letting fear or greed dictate your choices?
Exactly. It's about having conviction in your research and the emotional resilience to, ride out those market storms.
Mm-hmm.
That's really what differentiates an intelligent investor from a speculator.
Mm-hmm.
They're in it for the long game, not the quick profit.
It makes you think, does this Mr. Market analogy resonate with you? How comfortable are you with the idea of, long-term investing, holding stocks for years without being swayed by, short-term market swings? Think about how these concepts align with your own, investment philosophy.
Right.
I think it's a good point to pause and reflect.
Yeah, definitely. And, while these concepts come from Graham's teachings, decades ago, their relevance in today's market is still widely debated. Some argue that Graham's principles are outdated. Yeah. Especially with the emergence of these high growth tech companies and, the influence of factors like quantitative easing.
Yeah, it does feel like we're in a different financial landscape now.
Right.
With, traditional valuation metrics maybe not capturing the full picture. But then on the other hand, those core principles of focusing on intrinsic value, having a margin of safety and maintaining that disciplined long-term perspective, they seem more important than ever.
Yeah, you're right. Ultimately, regardless of, what era we're in, a company's value is tied to its ability to generate profits and create long-term shareholder value.
Right. It's about looking beyond the hype and analyzing a company's fundamentals, their competitive advantages, their resilience to withstand, economic challenges.
Exactly. And, it's important to note that value investing doesn't exclude high growth companies. It's about finding companies trading at a discount to their intrinsic value, regardless of their industry or growth trajectory.
Right.
I mean, a tech company with, massive potential could be a value stock if its price is significantly lower than its true worth. So the key is thorough research, assessing the company's fundamentals, and determining if its current price represents a good value proposition.
So bringing it back to AU Small Finance Bank, we explored their services, everything from digital banking to these specialized loans and investment options.
Right.
How do you see the connection between their offerings and these principles of value investing?
That's where it gets interesting. On the surface, a modern bank and a classic investing philosophy might seem like separate worlds.
Right. It's like comparing apples and oranges. They're both fruit, but they're very different.
Exactly. But there are these intriguing connections.
Okay.
For example, AU small finance banks focus on providing financial solutions for specific segments like farmer, women entrepreneurs, or startups.
Right.
That aligns with that value investing principle of understanding the business.
So by catering to these like niche markets, AU is demonstrating a deep understanding of their needs, their challenges, their growth potential.
Precisely. And this aligns with, the value investing approach of researching a company, understanding its operations and assessing its long-term prospects. It's about, looking beyond the surface and evaluating that underlying value.
It's a fascinating connection.
Yeah.
It's like they're applying a value-oriented lens to their product development and their market strategy.
Exactly. And, for investors, AU Small Finance Bank is a publicly traded company. So the principles of value investing can absolutely be applied to assess, whether investing in their stock makes sense.
So someone who's interested in potentially investing in, AU Small Finance Bank could use, Graham's principles to analyze their financials, their growth prospects, whether their current stock price offers like a good value proposition.
Exactly. The beauty of these principles is that they can be applied to a wide range of investment decisions.
From individual stocks to, entire companies.
It's like having this mental toolkit that you can use to navigate the financial world.
Exactly.
And assess risks, evaluate opportunities, and just make more informed decisions overall.
That's what the Intelligent Investor is all about. Empowering individuals to take control of their financial destinies and make sound decisions based on, logic and analysis, not emotions and speculation.
I can see why Warren Buffett considers it, the best book on investing ever written.
Yeah.
It's not just about, formulas and ratios. It's about developing a mindset, a way of thinking about investments.
Absolutely.
That can really benefit you throughout your life.
It's about becoming an intelligent investor, someone who understands that the market isn't always rational, that price and value can differ, and that, patience and discipline are essential for long-term success. So we've explored AU Small Finance Bank. We've delved into Benjamin Graham's wisdom and connected these seemingly, separate topics.
Right.
Now, before we move on to the final part of our deep dive, where we take a closer look at the concept of intrinsic value and how it applies to both individual stocks and even AU Small Finance Bank itself.
Okay.
I want to hear your thoughts. What insights from this conversation have really resonated with you so far?
Well, I think what stood out to me is how these timeless principles from The Intelligent Investor can still be applied today, even in this rapidly changing financial landscape. And it's fascinating to see how a company like AU Small Finance Bank is embracing innovation and technology while also staying true to those core principles of, creating value and serving their customers.
Yeah, it's a powerful combination.
Absolutely. And as we explore intrinsic value further, I encourage everyone listening to consider how these principles can be applied to their own financial decisions. Whether they're evaluating investment opportunities or simply managing, their day-to-day finances.
Yeah, I think that's a great point to kind of segue into the next part of our conversation.
Absolutely.
All right, so we've talked about value investing in AU Small Finance Bank, but now let's really zero in on this concept of intrinsic value.
Okay.
It sounds a bit intimidating.
Yeah.
Like something that maybe only financial experts understand.
I get that. It can seem complex at first, but it's really a fairly straightforward concept.
Okay, so break it down for us.
Right.
What exactly is intrinsic value, and why is it so important for investors?
Well, simply put, intrinsic value is the true worth of an asset, based on a thorough analysis of its fundamentals.
Okay.
It's about figuring out what a company is actually worth, regardless of its current market price, or the whims of Mr. Market, as Graham would say.
So it's like looking beyond the sticker price to figure out something's real worth.
Exactly.
Based on its quality, its features, its potential.
Just as you wouldn't buy a house without considering its value beyond the asking price.
Right.
Intelligent investors shouldn't buy stocks without assessing their intrinsic value.
That makes sense for stocks, but, how does intrinsic value apply to AU Small Finance Bank? I mean, they offer services, not just a stock.
Well, while AU Small Finance Bank is publicly traded and has a stock,
Right.
the concept of intrinsic value can also be applied to the bank itself.
Okay.
It helps us assess its overall financial health, its growth potential, and its ability to generate long-term value for its shareholders.
So we're looking at the whole picture.
Exactly.
Their assets, their earnings, their customer base, their strategic direction to evaluate, the bank's underlying worth.
Precisely. And this is where it gets interesting because AU Small Finance Bank has these unique characteristics that contribute to its intrinsic value.
Okay, so what are some of those characteristics that stand out to you?
Well, their focus on digital banking and innovative use of technology like, WhatsApp banking shows they're adapting to changing customer needs and staying ahead of the curve in a rapidly evolving industry.
So it shows they're not stuck in the past and they're committed to improving that customer experience.
Exactly. Their commitment to financial inclusion through specialized products for farmers.
Right.
Women entrepreneurs and underserved communities also contributes to their intrinsic value. They're expanding their market reach and making a positive social and economic impact.
So it's like they're weaving social responsibility into their business model.
Absolutely. And their diverse loan portfolio, which includes financing for commercial vehicles, tractors, and construction equipment, demonstrates their commitment to diversifying revenue streams and catering to a broader range of customer needs.
It sounds like they're not putting all their eggs in one basket.
Yeah.
And they're strategically positioning themselves for growth in, various sectors.
Right. And their expansion into areas like insurance investment products and financial education further strengthens their intrinsic value by providing a comprehensive suite of services for their customers.
It's like they're building this financial ecosystem that supports a customer throughout their various life stages and needs.
This holistic approach, combined with their focus on technology and financial inclusion, suggests that AU Small Finance Bank is well positioned for long-term growth and value creation.
So to bring it back to, Benjamin Graham, even though AU Small Finance Bank might not be a traditional, undervalued value stock,
right,
their business model, their strategic direction, their commitment to creating value for customers and shareholders, it all kind of aligns with, intelligent investing principles.
That's a great point. Value investing isn't just about finding cheap stocks. It's about identifying companies with strong fundamentals, sound management, and a clear vision for the future.
So as we wrap up this deep dive, what are some key takeaways that our listeners should keep in mind?
Well, whether you're considering investing in a particular stock, choosing a bank, or making everyday financial decisions, the principles we've discussed can help you make more informed strategic choices.
So don't be afraid to do your research.
Exactly.
Ask questions and really determine the true value of what you're considering.
Remember, price is what you pay, but value is what you get.
I like that.
And as Benjamin Graham emphasized, investing in your financial literacy is crucial.
Yeah.
Keep learning, keep exploring, and develop the confidence to navigate the world of finance.
So that's the key to financial well-being.
Absolutely.
Understanding the fundamentals, making informed choices, and building a future that aligns with your values and aspirations.
Well said.
Awesome. Well, thanks for joining us on this deep dive.
Yeah, thanks for having me.
We hope this conversation has encouraged you to, continue exploring the world of finance and making smart financial decisions.
Absolutely.
Until next time.
Ever feel like you're just kind of skimming the surface of knowledge? Like you get the basics, but something's missing.
Yeah, I know that feeling.
Like a deeper understanding. Well, we've all been there, and today we're diving deep into a technique that could totally change the way you learn.
Oh, yeah, this is a good one.
The Feynman technique.
It's named after.
It's named after, well, the brilliant physicist Richard Feynman, and it's all about really understanding stuff, not just like memorizing facts and figures.
Right.
And we've got a whole bunch of articles, guides, even some personal stories about how this technique has helped people. So are you ready to unlock like a whole new level of learning?
Let's do it.
Let's go.
So the cool thing about the Feynman technique is how simple it is. Like, imagine you're explaining something really complex to someone who has no clue about it, like a sixth grader.
Okay.
Or even better, a rubber duck.
Okay, hold on. A rubber duck. I'm not sure I'm following.
Okay. Think of it this way. It's all about forcing yourself to simplify and clarify. Like, really get to the heart of what you're trying to understand. No fancy jargon, no shortcuts, just pure knowledge distilled down to its essence. That's the whole idea behind this technique.
So it's not just like highlighting a textbook and calling it a day.
No.
I'm intrigued.
It's about active engagement. And it's got these 4 key steps. First, you got to choose your concept. Like, what do you really want to learn?
Gotcha. Write it down.
Write it down, exactly.
So let's say I'm trying to wrap my head around something like, I don't know, quantum entanglement.
Oh, good one.
Step 1, I write it down. What's next?
All right, so step 2 is where the magic happens. You got to teach it. Imagine explaining quantum entanglement to that sixth grader or to your rubber duck.
Okay.
Write it out, talk it out loud, whatever works. The key is to use simple, clear language.
So I just keep explaining it till it clicks.
You got it. But there's a catch. As you're explaining, you're going to hit some snags. Like maybe you can't quite explain how entanglement affects particles, or you realize you don't really get the implications.
Yeah, that makes sense.
And that's where the real learning starts. Step 3 is identifying those gaps in your knowledge.
Oh, I see what you mean. Like those moments where you realize what you thought you knew and what you actually know are 2 different things.
Precisely.
That's pretty cool. That's the power of this technique, isn't it?
Exactly. And once you've found those gaps, you go back to your sources and fill them in. Research, read, really dig deep until those fuzzy areas become crystal clear.
Okay, so I've got my concept, I've tried to teach it, and I've found some gaps in my knowledge.
Embarrassing gaps.
What's the last step?
All right, step 4 is all about refining and simplifying. You revisit your explanation and make it even clearer, even more concise. Can you get rid of the jargon and technical terms? Can you make it so simple that anyone could understand it? That's the goal.
The simplification part sounds kind of tough. I mean, is there a risk of oversimplifying, losing the nuance?
That's a great point. It's a balancing act for sure. But the whole process of striving for simplicity forces you to really grapple with the core concepts. You're not just memorizing facts. You're building a deeper, more intuitive understanding. And this is where it gets really interesting.
Okay, I'm hooked. Why is this technique so effective? It seems almost too simple to be true. I feel like this is tapping into something really fundamental about how we learn.
Yeah, it's not just some quirky trick.
Like, is there some science behind this?
Oh, absolutely.
Yeah.
The Feynman technique is grounded in solid cognitive science.
Okay.
Like when you try to explain something, you trigger this process called elaborative rehearsal.
Elaborative rehearsal.
Yeah, you're not just passively absorbing information, you're actively engaging with it, making connections, creating a more robust memory trace. It's like you're building a mental model of the concept.
Huh. So it's not just about knowing the facts, it's about understanding the relationships between them, the why.
Exactly.
Makes me wonder what Feynman himself would say about truly knowing something.
That's a great point. It leads us to one of Feynman's most insightful observations. He believed that knowing the name of something is totally different from truly understanding it.
Right,
Like he used the example of a bird. You could learn the names for a bird in a bunch of languages, but that wouldn't tell you anything about its behavior, its habitat, its role in the ecosystem.
Wow, that's a powerful analogy. It's not about just memorizing labels.
Right.
It's about getting the deeper essence of the thing.
Exactly. And this brings us to another crucial point. The Feynman technique isn't meant to be used on its own.
Oh, really?
It works best when you combine it with other learning strategies, like, for example, spaced repetition.
Okay, yes, spaced repetition. I've heard that before, but not sure how it works.
So it's based on the idea that we forget things over time,
Oh, yeah, definitely.
but we can combat that forgetting by reviewing the material at increasing intervals.
Hmm.
Think about those flashcard apps that pop up with questions you thought you aced. That's spaced repetition.
Oh, right. Yeah.
So how does this tie into the Feynman technique? Well, imagine you've just explained a concept using the Feynman technique.
Okay.
You've identified your gaps, you've filled them in, and you've refined your explanation. Now, instead of just moving on, you schedule a review session, say 2 days later. And during that review, you use the Feynman technique again.
Ah, I see. So you're using the Feynman technique to actively recall and reinforce the information at those intervals.
Exactly. It's like this 1-2 punch for your memory.
Okay.
Spaced repetition, make sure you encounter the material multiple times. And the Feynman technique makes you actively engage with it each time, making those neural connections even stronger.
So this is like a brain hack to learn more effectively.
Pretty much.
I bet it helps with that pre-exam cramming too.
Oh, absolutely. By combining the Feynman technique with spaced repetition, you're not just cramming information in, you're building a deep, lasting understanding. And that's going to stick with you long after the exam is over.
That's amazing. Seriously, a game changer. But is the Feynman technique kind of a one-size-fits-all solution? Are there times when it might not be the best way to go?
That's a great question. While the Feynman technique is super versatile, it's not always the best tool for every learning scenario.
Oh, okay.
Like, it really shines when you're dealing with concepts that require deep understanding. Like scientific theories, historical events, or philosophical arguments.
So it's not ideal for memorizing lists of facts, dates, or vocabulary.
Exactly. If you're dealing with information that's primarily based on rote memorization, other techniques might be more efficient.
Right, makes sense.
But for anything that requires true comprehension, the Feynman technique is a powerful ally.
It's about choosing the right tool for the job.
Yeah.
And honestly, sometimes the Feynman technique can feel a bit, effortful.
Yeah, it's definitely not passive learning.
It takes work.
It requires a willingness to really dig deep, to confront those moments where you're like, oh, I don't actually get this. But that's where the growth happens.
It's about embracing the struggle.
Exactly.
But I imagine there are times when it can feel a bit overwhelming.
Absolutely. It's a process. You might find yourself cycling through the steps, revisiting your sources, and refining your explanations as you go.
So it's not about getting it perfect on the first try.
No.
It's about the journey.
It's about deepening your understanding, uncovering new connections, and ultimately becoming a more insightful and engaged learner.
And speaking of insights, before we wrap up, I'd love to hear any final thoughts you have on how our listeners can make the most of this technique.
Oh, yeah, sure.
Any tips or tricks? So many great insights today. But if you had to pick just one piece of advice for our listeners, what would it be?
That's a tough one. But I think the most important thing is to embrace simplicity. Strip away the jargon, the complexity, and get to the core of what you're trying to understand.
Like explain it to a 5-year-old simple.
Exactly. Don't worry about sounding eloquent or using all the fancy terms. Just focus on explaining it in a way that makes sense to you.
It's easy to say, but harder to actually do. Any tips for our listeners who are feeling intimidated?
One thing that can really help is to find your own Feynman audience.
Okay.
It doesn't have to be a literal rubber duck. It could be a friend, a family member, even a pet. Just someone to talk to explain the concept to.
Right.
And it doesn't matter if they understand everything perfectly.
Yeah, it's the act of explaining that matters.
Exactly.
It's like turning learning into a conversation.
Exactly.
And that reminds me of something you said earlier about how Feynman believed that true knowledge goes beyond just knowing names and labels.
Right.
It's about understanding the why behind the what.
Exactly. And the Feynman technique is all about cultivating that deeper level of understanding, asking questions, challenging assumptions, and being willing to admit when you don't know something.
It's about becoming an active participant in your own learning, not just a passive recipient of information. So for those who are ready to start this journey, what's the best way to go about it?
Pick one concept, just one that you've always wanted to understand better. Could be anything, From the theory of relativity to how the stock market works to the history of your favorite band.
Okay, then what?
Then set aside some time. Grab a notebook, a whiteboard, whatever, and start explaining. Talk to your rubber duck, talk to your cat, talk to the mirror, doesn't matter.
So it's like a new kind of study group.
In a way, yeah.
But seriously, it's really cool that this isn't some super complicated method. It's something anyone can do.
Absolutely. It's about unlocking that innate curiosity and learning potential we all have.
Love it. So there you have it, the Feynman technique. Simple but powerful, maybe a little quirky, but super effective. It can change how you learn and even how you think. And that's a wrap for our deep dive into the Feynman technique. We hope you learned some valuable stuff today and that you'll give it a try. Pick a concept, find your Feynman audience, and start explaining. You might surprise yourself with what you can learn. Until next time, keep diving deep and keep those brains buzzing.
All right, so today we're diving deep into something that I think a lot of us struggle with. Learning new things effectively and efficiently.
Yeah.
And I know you've got a goal in mind. You want to really level up your learning game. You want to learn things faster, remember them longer.
Right.
And I think you've come to the right place. We're going to be tackling the Feynman technique today, and judging by your stack of sources, personal notes, articles, even a study guide, you mean business.
Absolutely.
You're ready to really dive into this. So let's unpack this technique. I mean, this is a technique that even a Nobel Prize-winning physicist swore by.
Right.
So let's see how it can work for you.
Yeah, you've picked a really fascinating technique, and it's clear you're putting in the effort by gathering all these sources. What I find really interesting is that this technique is named after Richard Feynman, who wasn't just any physicist, but a renowned science communicator.
Right.
And he was actually nicknamed the Great Explainer.
Wow. The Great Explainer.
Yeah. He was really passionate about making complex topics understandable to anyone. And his approach, now known as the Feynman technique, really embodies that passion.
I love that. So it's not just about cramming facts into your brain. It's about truly grasping the essence of what you're learning.
Right.
And becoming a better explainer yourself, which I think is a fantastic goal.
Yeah.
But before we get ahead of ourselves, let's break it down. Let's break down what this technique actually involves.
Okay, so at its core, the Feynman technique kind of flips the learning process on its head. So instead of passively absorbing information, you actively engage with it by explaining it as if you were teaching someone else.
Oh.
So like, imagine you're trying to teach a complex concept to a sixth grader. You'd have to break it down, simplify it, and use clear language.
Right.
Right?
You can't use all that jargon.
Exactly.
You got to make it make sense.
Yeah.
I love that. So it's like suddenly you're the teacher, and that forces you to really understand the material inside and out.
Yeah, and actually, one of your sources even mentioned explaining things to a rubber duck.
A rubber duck.
Yeah.
I love that visual. That's fantastic. It really highlights the idea of breaking things down to the most basic level.
Exactly, and that's where the brilliance of this technique lies, because when you force yourself to explain a concept simply, you quickly uncover the areas where your understanding is shaky. And those, I don't actually know this moments, those are gold.
Those are the best.
Because they pinpoint exactly what you need to work on.
Right. It's like you think you understand something and then you try to explain it to somebody else and you're like, oh, wait, I've got some gaps here.
Exactly.
Okay. So we've got this idea of learning by teaching.
Right.
But how does it actually work in practice?
So the Feynman technique boils down to 4 key steps, which are consistently highlighted in all your sources. The first step is to choose a specific topic that you want to learn. And this seems obvious, but it's crucial to be focused. So don't try to tackle like all of astrophysics at once.
Right.
Instead, maybe choose a specific concept like black holes.
So break down those big, overwhelming topics into bite-sized pieces.
Exactly.
That you can actually digest. Makes sense. So what's next?
Okay, so the second step, and this is the heart of the technique, is to explain that chosen topic in simple terms, as if you were teaching it to someone with no prior knowledge. This could be a sixth grader, a friend, or even that rubber duck.
That rubber duck.
The key is to avoid jargon and use clear, concise language. It's really about proving to yourself that you understand the concept, not just regurgitating memorized facts.
And I think this is where those knowledge gaps that we were talking about will start to surface.
Yeah.
And that's a good thing.
Exactly. It's like shining a light on the areas where you need to focus your learning efforts.
Exactly.
So that brings us to the third step, which is identifying those gaps. So where did you stumble in your explanation? What parts were difficult to put into simple terms? And this step requires some self-awareness, acknowledging where you might need to go back to the source material.
Right. It's like having a little internal critic. But in a good way. Yeah. This critic is helping you become a more efficient learner by focusing your attention where it's needed most.
Precisely. And once you've identified those gaps, the fourth step is to go back to your sources, do more research if needed, and refine your explanation. So it's about filling in those gaps, making connections, and ensuring you can explain the topic clearly and concisely.
So it's an iterative process of learning, explaining, identifying gaps, and refining.
Yeah.
It's about actively engaging with the material and shaping your understanding through this back and forth process.
Exactly. It's about turning learning into a dynamic conversation with yourself and the material, rather than just passively absorbing information.
Okay, I'm starting to see how this works, but honestly, it sounds like it could be pretty time-consuming.
Yeah.
Isn't this a bit much for, busy people who just want to learn something quickly?
That's a valid concern, and it's important to be realistic about time commitments. The Feynman technique might not be the best fit for every learning scenario, especially if you're under a tight deadline. However, what's fascinating is that while it might seem time-consuming up front, it can actually save you time in the long run.
How so?
Think about those times you've crammed for an exam. You memorize a bunch of facts, and then you promptly forget everything a week later.
Oh, yeah.
That's surface-level learning.
Right.
The Feynman technique, on the other hand, encourages deeper understanding, which means you're more likely to retain the information over time. You're not just memorizing, you're internalizing the concepts. You're making connections. You're building a mental framework.
So it's like investing the time up front to build a solid foundation, which means you don't have to keep rebuilding it over and over again. I can see how that would be more efficient in the long run. But I still think some listeners might be hesitant to try this technique, especially if they're used to more passive forms of learning. What would you say to those folks?
I'd say give it a try. You might be surprised at how engaging and even enjoyable this technique can be. It's about turning learning into an active process, a puzzle to solve, a challenge to conquer. And when you finally grasp that concept and can explain it clearly in your own words, it's incredibly rewarding.
It's like that aha moment when the pieces finally click into place and you feel a sense of accomplishment. I love that.
Yeah.
Okay, but let's get practical. If someone's ready to try the Feynman technique, where should they start? Do you have any tips or tricks for making the most of this approach?
Absolutely. One of the biggest hurdles, I think, is choosing the right topic. Don't be too ambitious at first. Choose a concept that's relatively small and well-defined. So instead of tackling the history of philosophy, maybe start with Plato's theory of forms.
Okay, so break it down into manageable chunks.
Yeah.
That makes sense.
Wow.
What else?
Don't be afraid to get creative with your explanations. The beauty of this technique is that it encourages you to find what works best for you. Some people find it helpful to write out their explanations, while others prefer to talk it out loud. Some people draw diagrams or create mind maps, while others use physical objects or act things out. Experiment and find what resonates with you.
That's great advice. It's about making learning more engaging and personalized. It's about finding your own learning style and using it to your advantage.
Exactly. And don't be afraid to involve other people. Find a study buddy, a friend or family member who's willing to listen to your explanations. It can be incredibly helpful to have someone to bounce ideas off of and to provide feedback. Plus, teaching someone else is one of the best ways to solidify your own understanding.
It's like that saying, if you can't explain it simply, you don't understand it well enough. Having someone else to explain it to forces you to really think it through. Okay, these are all fantastic tips, but I want to go back to something you mentioned earlier, the idea that this technique might not be suitable for every learning situation. Could you elaborate on that a bit? When might the Feynman technique not be the best approach?
Yeah, you're right. It's important to recognize that there's no one-size-fits-all learning method. The Feynman technique, while powerful, does have its limitations. So, for example, if you're simply trying to memorize a list of facts or dates, rote memorization might be a more efficient approach.
So for those situations where it's more about pure memorization, this technique might not be the most effective use of your time. What other situations might not be a good fit?
The Feynman technique can also be quite mentally demanding. It requires you to think deeply, make connections, articulate your thoughts clearly. So if you're feeling mentally fatigued or stressed, it might be better to choose a more passive learning activity like reading or listening to a podcast.
So being self-aware, knowing your own mental state is key.
Yeah.
You don't want to force yourself to use this technique when you're not in the right headspace for it. Are there any other drawbacks or potential pitfalls that people should be aware of?
One potential drawback is that this technique can be quite time-consuming, as we discussed earlier. It's not a quick fix. It requires you to slow down, process information deeply, and potentially go back to your sources multiple times to refine your understanding.
So it's not a magic bullet.
Right.
It requires effort, dedication, and a willingness to embrace the process.
Exactly. And it's important to be honest with yourself about whether you have the time and mental energy to commit to this approach. If you're feeling overwhelmed or pressed for time, it might be better to choose a simpler learning method.
Okay. That's helpful to know. So we got this powerful technique, but it's not always the right tool for the job. It's about being strategic and using it when it makes sense, not forcing it into every learning situation.
Precisely. And I think it's worth emphasizing that even if the Feynman technique isn't always the most practical approach, the underlying principles can still be incredibly valuable.
What do you mean by that?
Well, even if you're not going through all 4 steps of the technique formally, you can still apply the core idea of actively engaging with the material.
Right. For example, if you're reading a book, you can pause periodically and try to explain what you've just read to yourself or to someone else. Or if you're listening to a lecture, you can jot down key points and then try to summarize the main takeaways in your own words.
So it's about taking those moments throughout the day to check your understanding, to see if you can explain it in your own words, to make those connections. It's about being an active participant in the learning process, even when you're not formally using the Feynman technique.
Exactly. It's about cultivating a mindset of curiosity and engagement rather than just passively absorbing information. And that's something that can benefit you no matter what you're trying to learn.
Okay, I love that. It's about taking those principles and weaving them into your everyday learning habits. It's about becoming a more intentional and engaged learner overall. But I'm curious, even with all these tips and tricks, some people might still struggle to make this technique a regular part of their routine. Do your sources offer any advice for overcoming those hurdles and staying motivated? Absolutely. One of the best things you can do is set realistic goals. Don't try to master the Feynman technique overnight or apply it to every single thing you're learning.
Right.
Start small, choose 1 or 2 concepts a week to focus on, and gradually build from there.
So it's about building a habit, not overwhelming yourself with unrealistic expectations. What else can help?
Another helpful tip is to find ways to make the process more enjoyable. Remember those creative explanations we talked about? Don't be afraid to have fun with it.
Yeah.
If you're a visual learner, create colorful mind maps or even draw comic strips to illustrate the concepts. If you enjoy storytelling, turn the concept into a narrative or a song. The more you can engage your interest and make it fun, the more likely you are to stick with it.
Yeah, it's about finding those little sparks of joy in the learning process.
Yeah.
That makes sense. And what about those moments when motivation inevitably dips? We all have those days when we'd rather scroll through social media than tackle a challenging concept.
Oh yeah, for sure. That's where accountability can be a game changer. Find a study buddy who's also interested in the Feynman technique, or even just someone who's working towards a similar learning goal. You can check in with each other regularly, share your progress and challenges, and keep each other motivated. Sometimes just knowing that someone else is expecting you to show up can be a powerful motivator.
That's like having a learning partner in crime. I like that. And what about those times when you're feeling stuck on a particular concept, those moments where you just can't seem to wrap your head around it?
Yeah, don't be afraid to step away and come back to it later. Sometimes our brains just need a break to process information. Go for a walk, listen to music, do something completely unrelated to learning, and then come back to the concept with fresh eyes. You might be surprised at how much clearer things seem after a little mental break.
That's great advice. Sometimes a little distance can give you a new perspective. Okay, so we've covered a lot of ground today, from the nuts and bolts of the Feynman technique to tips for making it a sustainable part of your learning routine. But before we wrap up, I want to revisit something you mentioned earlier, the idea of combining this technique with other learning methods.
Oh, yeah.
This is where things get really exciting for me, because it's all about finding those synergistic combinations that amplify the learning process.
Exactly. It's about creating a personalized learning toolkit that leverages the strength of different methods. For example, you could combine the Feynman technique with spaced repetition.
Oh, yeah. Spaced repetition.
A technique that involves reviewing material at increasing intervals to enhance long-term retention. So after you've gone through the 4 steps of the Feynman technique, you could schedule those concepts to be revisited at spaced intervals using flashcards or an app. This reinforces the learning and helps move it from your short-term memory to your long-term memory.
It's like creating a learning schedule that optimizes for both understanding and retention. I love that.
Yeah.
What other combinations do your sources suggest?
Another powerful combination is the Feynman technique with active recall.
Active recall?
Which involves actively retrieving information from memory without looking at your notes or resources. So after you've explained a concept using the Feynman technique, you could put away your notes and try to recall the key points from memory. This forces you to actively engage with the material and helps identify any gaps in your understanding.
It's like giving your brain a workout.
Exactly.
And speaking of workouts, another great combination is the Feynman technique with the Pomodoro technique.
Oh, yeah.
A time management method that involves working in focused bursts with short breaks in between.
Right.
This can be especially helpful for those more mentally demanding aspects of the Feynman technique, like breaking down a complex topic or identifying gaps in your understanding. The structured bursts of focus can help you stay on track and avoid burnout.
Exactly. And for visual learners, combining the Feynman technique with mind mapping can be incredibly powerful.
Mind mapping.
Creating a mind map of a concept that you're trying to Feynmanize can help you visualize the connections between ideas, make the information more memorable, and even spark new insights.
It's like creating a mental landscape of the information.
Mm-hmm.
I'm a huge fan of mind maps. Okay, so we've got spaced repetition, active recall, the Pomodoro technique, mind mapping. I'm starting to see how many possibilities there are for combining these different learning methods. It's about finding what works best for you and creating your own personalized learning system.
Exactly. And the most important thing is to have fun with it. Learning should be an adventure, a journey of discovery.
Yeah.
So experiment with different combinations, see what resonates with you, and enjoy the process of becoming a more effective and engaged learner.
I love that. So we've gone from feeling a bit intimidated by this Nobel Prize-winning physicist technique to having a toolbox full of practical strategies and creative combinations. I think you've given our listener a fantastic starting point for their Feynman technique journey.
Absolutely. And remember, it's not about becoming an expert overnight. It's about embracing a mindset of continuous learning and finding joy in the process of understanding the world around us.
Beautifully said. So to our listener out there, take what you've learned today, choose a concept that sparks your curiosity, and give the Feynman technique a try. You might just surprise yourself with what you're capable of learning. And until next time, keep diving deep. Welcome back, everyone. Ready for another deep dive? Today, we're tackling value investing, and we're going to use that lens to take a closer look at AU Small Finance Bank.
Sounds good.
We've got a mix of sources for this one. Some classic investment advice, a little peek into AU Small Finance Bank's website, and even a review of The Intelligent Investor by Benjamin Graham.
Ah, the Bible of value investing.
Exactly. So before we get into the nitty-gritty of AU Small Finance Bank, let's set the stage. What exactly AU's value investing?
Well, in the simplest terms, it's all about finding those hidden gems in the market companies that are trading for less than they're actually worth.
Okay, so it's like finding a designer dress at a ridiculously low price.
Exactly. Except the dress is a company with huge potential that the market is underestimating. It's called finding undervalued companies.
I like that analogy. But how do you figure out if a company is truly undervalued?
That's where things get a little more complex. A big part of it is understanding the concept of intrinsic value.
Intrinsic value. I think I remember reading about that in the book review.
It's a core idea in value investing. See, the price of a stock on the market, that doesn't always reflect what a company is truly worth. Intrinsic value is all about digging deeper, looking at the company's potential future earnings, its assets, its management. It's about seeing beyond the current stock price.
So it's like assessing a house, right?
Okay.
You don't just look at the asking price, you consider the location, the size, the condition.
Exactly. You're trying to get a more accurate picture of what that house, or in this case, that company, is truly worth. And Benjamin Graham, the father of value investing, he actually came up with a revised formula for calculating this intrinsic value.
Okay, now you're bringing back memories from that book review. It involves some pretty intense calculations, right?
It does get a bit technical, but the core idea is to compare a company's potential for growth to a benchmark that's super stable, like the yield on AAA corporate bonds. Those bonds are considered incredibly safe.
So it's like comparing a race car to a reliable family sedan. One is all about speed and potential, the other is about safety and predictability.
That's a great way to put it. And by making that comparison, you can start to see if the market is underestimating the race car, or in this case, the company's true growth potential.
This is making a lot of sense. But even with all these calculations, there's always a chance you could be wrong, right? Markets can be unpredictable.
That's where another crucial concept comes in, the margin of safety.
The margin of safety. That sounds intriguing. Tell me more.
It's all about building in a buffer for error, acknowledging that our estimations might not be perfect. So let's say you estimate a company's intrinsic value to be $100 per share.
Okay.
A value investor wouldn't necessarily jump in and buy at $100. They might wait for it to drop to, say, $70 or even $60. That difference is the margin of safety. It's like a cushion in case your calculations were a bit off or if the market takes an unexpected turn.
So it's like getting a discount on top of the discount. I like the sound of that. But I'm guessing this margin of safety depends on your risk tolerance too, right?
Absolutely. Everyone has a different level of comfort when it comes to risk. Someone with a higher risk tolerance might be comfortable with a smaller margin of safety, but for someone who's more cautious, a larger buffer would make sense.
That makes sense. Okay, so we've got a grasp on some of the key ideas behind value investing. Finding undervalued companies, understanding intrinsic value, and building in that margin of safety. But how does all of this apply to a real-world company like AU Small Finance Bank?
Great question. That's where the real fun begins.
And we're going to find out after a quick break.
Sounds good.
All right, let's roll up our sleeves and dig into those financials. I'm curious to see if AU Small Finance Bank lives up to the principles of value investing.
Sounds good to me. Where do you want to start?
Well, the book review of The Intelligent Investor talked about earnings per share, or EPS. What can we glean from AU's EPS?
Okay, so looking at their EPS over the past few years, we can see it's been trending upwards. That suggests they've been pretty consistently growing their profits.
Okay, that sounds promising. But you mentioned earlier it's not just about the quantity of earnings, but the quality too.
You got it. And that's something you really have to dig into. For example, you want to look at how they're growing that customer base. Is it organic, or are they relying on some risky lending practices? And when they expand into new markets, is it strategic or just chasing quick wins? Those are the kinds of questions a value investor would be asking.
So it's about understanding what's driving those earnings, making sure their growth is built on a solid foundation. Kind of like checking the roots of a tree, right? You want strong roots that can weather a storm.
Exactly. Now, another thing to keep an eye on is their debt level. You don't want a company that's drowning in debt, right? Excessive debt that can really hinder their ability to grow and make them vulnerable when the economy takes a dip.
Yeah, that makes sense. It's like carrying around a heavy weight.
Yeah.
So how's AU doing in that department?
Well, if you look at their debt-to-equity ratio, which basically compares their debt to their ownership stake, they seem to be in a pretty healthy range, not overly reliant on borrowing to fuel their growth.
Okay, so that's reassuring. It sounds like they're managing their debt responsibly. What else should we be looking at?
All right, let's shift gears and look at something that's like the holy grail for value investors. Return on equity, or ROE. This tells us how effectively they're using shareholders' money to generate those profits.
So it's a measure of efficiency, like how well are they turning investments into actual profits?
Exactly. You want to see a company that can squeeze as much profit as possible out of every dollar invested. And AAU has been pretty consistent in delivering a solid ROE, which suggests their skill at deploying capital and generating good returns for those shareholders.
That's definitely a plus. But remember, numbers can only tell us so much, right? What about the qualitative side of things, like their management team, their competition, all that good stuff?
You're absolutely right. Those factors are crucial. So let's start with their management team. I mean, a company's leadership can make or break it, right? You want to see a team that's experienced, has a good track record, and operates ethically.
From what I've gathered, their leadership team seems to have a pretty solid reputation in the financial sector. They seem experienced, capable of making sound decisions, and have a good understanding of the market.
Okay, good. Strong leadership is a must-have, especially in such a complex industry. Now, let's think about the competitive landscape. Banking, it's a pretty cutthroat industry, right? Lots of players vying for those customers. So how does AU position themselves amidst all that competition?
Well, they seem to be carving out a niche by really focusing on those underserved markets, particularly in rural and semi-urban areas.
Interesting. So it's like they've found a pond with a little less competition and are making the most of it. But doesn't that limit their growth potential? I mean, if they're only focusing on a specific segment.
That's a good point. It's a trade-off, right? Focusing on depth rather than breadth. So a value investor would need to consider if that strategy aligns with their own investment goals and expectations.
Exactly. And speaking of goals, what about AU's vision for the future? Where do they see themselves going, and how do they plan to get there?
Based on their website and some of their public statements, they seem to be laser-focused on expanding their reach, both in terms of geography and the types of services they offer. And they're definitely not shying away from technology, investing in new platforms, exploring new ways to serve customers.
Okay, so they're not just sitting back and enjoying the status quo, they're actively looking for ways to grow and adapt to the changing market. That's a positive sign.
It seems like they're checking a lot of the boxes so far. Good financials, capable management, a clear focus, and a forward-thinking approach. But before we get too excited, let's not forget about one of the core principles we discussed earlier, the margin of safety.
Oh, absolutely. Even with all these positive signs, we got to stay grounded. The market's unpredictable and things don't always go as planned. The margin of safety, that's all about acknowledging those uncertainties and building in a buffer.
It's like acknowledging that even with the best map, you might encounter some detours along the way, right? So how would we apply that principle to AU? What potential risks should we be mindful of?
Well, one risk to consider is their focus on those rural and semi-urban markets. While it's a good strategy for differentiation, those markets can be more sensitive to economic downturns or even changes in agricultural policies.
Ah, I see. So a smart investor would want to really analyze those external factors and how they could impact AU's performance, right? Factor that into their valuation.
Exactly. And they'd also need to keep a close eye on the competitive landscape. AU might be doing well now, but what if those bigger banks with deeper pockets decide to enter those markets more aggressively? That could squeeze AU's market share and profitability.
So it's about thinking long-term, anticipating potential challenges down the road, almost like playing chess, trying to predict your opponent's moves several steps ahead.
Great analogy. Value investing is all about thinking critically, weighing the upside potential and the downside risks. So, where do we land on AU? Could this be a company worthy of a value investor's portfolio?
Well, based on what we've seen so far, AU seems to have a lot going for it. Consistent earnings growth, strong return on equity, strategic focus,
But there's still some question marks and potential risks that need careful consideration.
Exactly. Remember, folks, this deep dive is just a starting point. It's about giving you the knowledge to kickstart your own research journey.
So don't rush into any decisions. Take the time to really dig into AU's financials, study their competition, and weigh those risks and rewards carefully.
And don't forget those key principles: patience, emotional discipline, and lifelong learning. Those are your guiding stars in the world of value investing.
Couldn't have said it better myself. All right, I think it's time to shift gears and revisit some of those practical tips from The Intelligent Investor, that blog post you mentioned earlier.
Perfect. Let's see how those lessons can help us navigate the ups and downs of the market. So we talked about patience earlier, and that blog post on The Intelligent Investor really hammered that point home. It's easy to get caught up in the market hype and want to see those returns right away, but that's not really the value investing way, is it?
Nope, not at all. Patience, it's all about trusting the process, Understanding that building real wealth through value investing, it takes time. It's like planting a seed. You got to nurture it, give it time to grow. You can't just expect a giant tree overnight.
I like that. It reminds me of that quote, something about the stock market being a device for transferring money from the impatient to the patient.
Oh, yeah, that's a classic. And it's so true. Trying to time the market, chasing those quick gains, it often ends in disappointment. Value investing, it's about identifying those undervalued companies, holding on to them, letting that intrinsic value shine through.
And speaking of emotional roller coasters, let's talk about the next big lesson from that blog post. Emotional discipline. Man, that's got to be one of the hardest things to master as an investor, especially when the market gets all crazy.
Oh, tell me about it. We're all human, right?
Emotions, they can really mess with our judgment. Fear leads to panic selling. Greed makes us chase those hot stocks without doing our due diligence. It's a constant battle.
Yeah, it's like being on a ship in a storm. If you let your emotions take over, you're going to make some rash decisions, steer yourself right off course. But if you stay calm, focused on your destination, you've got a much better chance of weathering that storm.
Exactly. It's about having a plan and sticking to it, no matter what craziness is happening in the market. Detaching your emotions from those investment decisions. Tough, but essential.
Absolutely. The market, it's always going to have its ups and downs, but your strategy, that should be anchored in solid principles, not your current mood. Couldn't agree more. And that brings us to the last big takeaway from that post. Lifelong learning. The world of investing, it's constantly changing, so we got to stay curious, we got to be adaptable.
Always be a student, right?
Yeah.
There's always something new to learn, some new trend to explore. But for someone just starting out, where should they focus their learning?
Well, I'd say go beyond those headlines, beyond those quick sound bites. Read those classic books, The Intelligent Investor, stuff like that. Follow reputable sources, maybe attend some webinars or conferences. The more you understand how this world works, the better decisions you'll make.
And don't forget to learn from your own experiences too, right? Both the good and the bad. Those are some of the most valuable lessons you can get.
Oh, absolutely. It's about refining your skills, keeping up with the times, never stop learning.
Great advice. So let's bring it all home, shall we? We've explored those core principles of value investing, finding those diamonds in the rough, understanding what they're really worth, managing risk, and we've taken a pretty deep dive into AU Small Finance Bank. We've looked at their financials, their leadership, their competition, their plans for the future.
We've also talked about those essential qualities, the patience, the discipline, that constant drive to learn. Those are the keys to success in the long run.
So as you continue your own research, remember those lessons. Value investing, it's not some get-rich-quick scheme. It's a marathon, not a sprint. It takes dedication, it takes discipline.
And when you're evaluating AU Small Finance Bank or any other company, don't forget those principles. Dig deep, ask the tough questions, make sure your decisions align with your goals, your risk tolerance.
Couldn't have said it better myself. We've given you the roadmap, the tools. Now it's your turn to explore. Embrace the challenge, keep learning, and most importantly, enjoy the journey.
Well said. It's been a pleasure diving into this with you today.
Likewise. Thanks for joining us on this deep dive into the world of value investing at AU Small Finance Bank. We hope you've learned a thing or two. Until next time, happy investing, everyone.